This is the Impact Report. I'm your host, Katie Ellman. The Impact Report brings together students and faculty in Bard College's MBA in Sustainability program with leaders in business, sustainability, finance, social entrepreneurship, and more. These conversations go live the first and third Friday of each month. This week, Bard MBA's Hector Aguirre speaks with Libby, co-founder and managing director of HL Ventures.
Libby is the co-founding manager and partner of HL Ventures, based in New York City. It was founded in 2009. HL Ventures is dedicated to building high-growth businesses that add value to society by protecting and promoting people and the planet, with a strong preference for diverse founding teams. HL Ventures' proprietary daily active engagement model blends the best of venture studio and investment firm on one platform to help grow companies from an early stage to exit in a holistic approach to company building. So welcome to the Impact Report, Oliver.
Thanks so much, Hector. I'm glad to be here.
So how about we dive right into it? So the Impact Report is hosted by the Bard MBA program. It's an MBA program in sustainability, and impact really is at the heart of everything we do and learn every day. So can you explain to us why you sought out to start an impact investment venture fund and how your investors' expectations may be different from traditional VC?
Yeah, so a lot of this goes back to my background. I grew up as the son and grandson of doctors and scientists, and so spent a lot of my youth in either my mom's medical practice, working the front desk, or my grandfather's laboratory, or watching my dad work with his team as well. And those teams were unified by both a really strong devotion to their mission. They were doing something important. They felt that way. It motivated them, and they were also very diverse. Postdocs and physicians and scientists and staff from all around the world, unified by that mission. I myself went a slightly different direction. I ended up starting my career in the government, and again, I was surrounded by diverse teams, ethnically, racially, gender-wise, geographically speaking, and that was very motivating. And obviously, in government, you have a mission too. When I left the government, I ended up, starting to work with startups, and I was really excited about the innovation in startups and the entrepreneurship, but really confused as to where all the mission orientation and the diversity went. Because in kind of 2003, 4, 5, 6, when I was first starting in this work, it was pretty homogenous space, and pretty I would say at times mercenary, right? And so when I had the opportunity, thankfully, to be able to launch my own firm, being at the nexus of growth, impact, and diversity was really the only way I would have done it. And part of that is altruistic, and part of it is because I thought there was a huge opportunity in funding folks who had not had easy access to funding, who had really great solutions. And thankfully that's played out pretty well over the course of almost 15 years now. You asked about investors and their expectations. For a long time, particularly in the early days, over a decade ago when we started, impact investing was tacitly thought of, or even overtly thought of, as concessionary. You're going to be kind of a charity, like, all right, maybe you make some money, but all the impact stuff is really the important stuff. The fact of the matter is, we never accepted that, and our particular investors never accepted that either. So we believe we can generate, market returns, and with hard work and all that, maybe even better than that. And that impact and diversity actually can help, drive. There's great research that diverse teams drive better results. This is, good peer-reviewed university research. You don't need to look hard to find it. And so using that as an investment thesis seemed very sensible to me. And the idea that would be concessionary didn't make any sense. But I know this is a long answer. The last thing I'll say is, impact is just a lens that you look at. So you can have 100% loss impact investing, which is philanthropy. You can have impact related credit, which might return 2 or 8 or 6%, and impact related venture capital, which has a much higher return bar. So all that can be impactful at the same time.
Got it. Do you mind speaking very quickly about the time frame of your fund? Is it 7 years, 10 years? So
we're a very traditional structure for our opportunity fund, which is a much longer, which is kind of a long horizon, right? So it's a 10-year funds, just like most venture firms. Our venture studio has kind of an indeterminate horizon. So it's more of what we call an evergreen vehicle. So we have less pressure to meet some of the traditional benchmarks in the venture studio, because we have longer and can build kind of a deeper relationship with those companies. And then in the venture fund, it's a little bit more traditional.
Got it. So if you were to go on HL Ventures, website, you would find the commentary on this on the venture studio and the daily active engagement, which seems like a very core part of the way you approach and supporting your startups. Can you speak how this has led to your success and how it pertains more closely to the thesis that you explained to us earlier?
Yeah, I'll say this. When I started in the venture world, venture has a lot of like core mythologies that power a lot of the way people talk about venture. One of the interesting debates in venture is how hands-on you want to be with the founders you work with. And I was always confused about this debate. I thought if you have the resources and you can help, why not help? I always liken it to a mountain climbing expedition, and sure, you might want to try your hand at climbing Mount Everest, but it is much wiser to do that with some Sherpas who really are experts. They know the mountain, they know where all the handholds are and the oxygen tanks and everything. So we could be Sherpas to entrepreneurs, taking nothing away from their their success and their their drive and their idea, but just to be there to help. And so I always said, like, look, I want to have I want our underwriting, our due diligence to be very strong. I want to pick great companies up front, but then the work begins, right? Then we can get involved, and over years and years and years of hard work with our portfolio companies, we can have a material impact. We can put our thumb on the scale, as it were. And that's why daily active engagement is such an important part of what we do. We've kind of taken it to an almost absurd degree. Most of our team members are focused on what happens after we write our first investment, or when we bring companies into the studio, and that, to me, has been an enormous reason for the success we've had as a firm.
Yeah, no, that makes perfect sense. So can you talk a little bit about what HL Studios versus what City Rock Ventures looks for between in its founders, and the differences between each fund?
Well, I'm not sure that we look for altogether different things, but they're manifestly different stages. So for us, just a really bright line, any company that's coming to us that's pre-Series A is in consideration for the studio, and anything that's at Series A or later is in consideration for direct investment from City Rock. Everything is owned by our holding company, HL Ventures, so it all comes to the same place. Eventually, me and all my team members work at HL Ventures, so we work part of our day on studio companies, sometimes on the City Rock companies. It's very, it's very fluid. The studio companies are really early, right? We'll meet companies sometimes with an idea on a napkin, maybe some product, some traction, but it's very early, right? By any stretch of the imagination. Whereas at City Rock, usually at Series A, companies have product market fit. They're seeing initial revenues, up to $1 million, something like that. But fundamentally, is the characteristics that I look for in a founder. Someone who's mission driven, who's capable, who's a resource magnet, who is resilient, who is devoted to some of the principles that we espouse as a firm, who is expert in the vertical they've chosen to be. And all those things are things that are universal no matter what the stage is. So we look for some of those same core, the integrity. It's the core of the entrepreneur herself or himself.
Can you tell us a little bit about a specific founder or success story that has gone through HL Ventures into City Rock?
Well, so I really try not to pick favorites, but there's some wonderful stories. For example, a company that recently achieved an exit is a community solar company called Solstice. Solstice was founded by two incredibly powerful women, Steph and Sandia, and this has been a great story. We've been involved in the studio at the studio level with Solstice for almost 4 years, and we've helped in a lot of different ways and really gotten to know the founding team. I've been with them every step of the way. We made investments out of each of our vehicles along the way, and it's been great to see a company that had the mission of making solar more affordable and accessible for people, founded by two women of color, achieve an exit and go all the way through the entrepreneurship journey, and to do so with an immense level of integrity, right? I mean, if you look at Solstice today, one of the things that every team member will tell you is this is a very mission-driven company, and yet, to have achieved that holy grail of entrepreneurship, which is an exit to a large company, and so that's been a really interesting journey for us. But we have over 50 portfolio companies. We're looking for, we hope our investment thesis is to alter the math a little bit, to have more companies reach a successful outcome, even if that successful outcome isn't necessarily ringing the bell at the New York Stock Exchange or the NASDAQ, right? Maybe it is, but I think if you change the expectations to needing everything to try and be a unicorn, you can have a lot more successful outcomes that in their aggregate return a really a good result.
So Oliver, I think you're reading my mind because that was my next question. I'm glad you brought up the unicorn comment because once again on your website there is this comment that says unicorns are great, but not every successful company needs to follow that particular narrative. So would you mind digging a little bit deeper on that?
Yeah, I mean, in America, we have somehow reduced the term entrepreneur to evoke a hoodie-wearing billionaire, like a Jack Dorsey or Mark Zuckerberg. And nothing against Jack and Mark, but entrepreneurship means more than that. It means more than that to our country. It cannot just be the Meta Facebooks or the Twitters of the world or Uber or Tesla or whatever it is. It's also 25 million small business owners. It's hundreds and hundreds of thousands of entrepreneurs with interesting ideas for technologies and inventions, and they all get a part of this too. And in our venture studio, because we have much more long-term view and evergreen capital, we're able to work with companies that may not have $1 billion exit. But the question is, can you turn some money into more money, and in so doing, get an idea or solution out into the world? And so I have never been a fan of what venture capitalists call the power law, which is that you're really looking for a couple of companies to return the fund, and the rest of it is like, all right, that's just part of entrepreneurship. You're just going to lose them. I am much more a fan of what a baseball fan would know as Moneyball, which is I want my players on base. I want them scoring runs. If someone hits a home run, so if we have a unicorn in the portfolio, and thankfully we do, that's great. I'm not going to complain about a home run, but I don't need to win games using only home runs and grand slams. And that's the game I want to be
playing. Phenomenal. So yeah, an exit can come either via IPOing or another larger company acquiring that smaller company. What happens in the case that a company doesn't want to have an exit and they just want to continue growing on their own?
Yeah, look, it's a really interesting question. I think the venture capital industry is really poorly organized for that sort of thing. In our venture studio, we're fine with that. So if a company wants to manage, for 50 years and issue dividends, the venture studio is cool with that. If money comes from our venture fund, like so the more formal fund, City Rock, that has limited partners, institutions that have invested in us, we do look for an exit. And that's a conversation with founders. We have a very transparent conversation where, what do you want from this company? And it's totally fine if they want to stay in the venture studio and operate the company forever. And, we make some investments from the studio, that's fine. But if they're moving through the Series A, Series B, that flywheel, then, probably they're going to be looking for an exit at some point.
Right. So can you talk to us a little bit about how you've seen the space evolve since you founded in 2009?
Some dramatic change, right? I mean, in a lot of different ways. I mean, 2009 was like actually the market lows from the 2008 financial crisis. So things looked a lot different. I mean, I've seen everything. There's so much change. First of all, I mean, what I used to think of as a Series A is now a seed round. And so there's been like a huge, change in terms of the amounts of capital involved. There's been massive changes in modalities in terms of like the sorts of dollars in this space. There was no such thing as a SoftBank Vision Fund when I got into this space. There was no Tiger Global, investing in a company every couple of days, right? So it was a much slower space in a lot of ways, and more even smaller than it is now. Although most people don't realize how small the space really is. I mean, even now today with SoftBank and other funds, there's well under $1 trillion under management in the entire venture capital industry, which, I mean, asset management is, smaller than like a Blackstone, so I think it's important to keep the scale in mind. Also, we've seen a lot of movement towards impact and diversity, DEI, ESG type screens. We have a long way to go. Right. So, there's slightly more money available to female and founders of color, for example, but still way too little. So like we're kind of moving along the road, but it's much left to travel. And then, I think we've seen a little move in the last few years about getting more hands-on and getting more help into the hands of entrepreneurs, which has been great. We've seen the kind of venture studio model really blossom. We've seen a lot of venture firms kind of create platform groups and really empower people there to feel, more like frontline, critical to the outcome type professionals, which is really important. So, gosh, I mean, there's been a lot of change. We're seeing a change in the fact that there are more more diverse general partners of funds, which is something we welcome. We're close allies with a lot of funds that have female managers, Black managers, Latinx managers, et cetera. So that's a great thing as well. We've seen geographic diversification. I could talk about this for hours, Hector. We've seen I think it's probably pretty healthy that we don't just have one, valley that has all of our innovation funding in America. It's great to see that obviously blossoming in New York, where I'm from, which I've been a big fan of and a part of that revolution here, but also to see the Atlanta funding ecosystem and funding in Detroit really, skyrocket, funding in Texas and LA and really interesting places. So the times are changing for sure. And some of it, much of it, I think, is for the better.
So if I can, I'd like to roll in two questions in one. So you talked a little bit about diversity of the founding teams and the actual venture capital firms themselves. So wanted to ask you, is your team as diverse as the business that you seek to find? And also, when talking about impact, that's a separate question. When I look at the landscape of venture capital, a lot of environmental impact is being driven in the clean tech space, but I don't see a lot of funding for ventures that are driving social impact. So wanted to get your take on that as well.
Yeah, look, right. So the second question first, there's a lot of funding in climate and sustainability right now, because also we've just gotten a lot of support from the federal government, and there's been there's a boom bust cycle. So there was a boom 10 years ago, and then it kind of busted, and then a bunch of stuff started working, which was kind of cool. So now we're in a big boom again. But look, we're evaluating, for example, DEI, HR technologies. We're evaluating, a lot of financial inclusion. We're looking at 2 different neobanks right now, one focused on the Black community, one focused on formerly incarcerated citizens. So there's a lot in Uplift, and so you just have to kind of look for it. And again, I wish it were more, right? I would always want more, but we are seeing a lot in kind of health and wellness outcomes. We do a lot of work in that space as well. We're seeing application of AI and other screening methodologies to make sure that underrepresented communities get access to healthcare, for example, and that their outcomes are also part of studies, which has been a big problem, right? Garbage in, garbage out data that doesn't take into account the needs of certain populations and certain illness types. So there's so many ways to express impact in venture, and we're generalists in that way. We love that. From a diversity perspective, obviously we've always wanted to have one of the most diverse portfolios in venture, and we've wanted our firm to represent that. Now, my co-founder, Eric Hatzimamos, and I are both white men. And I think that's okay, right? I think, most venture capital assets are still in hands like mine. And if we don't take responsibility for building in diverse funding for entrepreneurs of color, women, people from diverse geographies, et cetera, it's going to take decades for the problem to, for this inequity to be resolved. And so I think it's important for funds that have, leaders who look like me to also be part of impact and diversity. Now, the rest of our team, we're majority women. We have a lot of professionals of color. And so we have tried to make the team look like the ecosystem that we're trying to create amongst our entrepreneurs. So if you look at our advisors, our venture partners, our team, you'll see a lot of diversity there. We're one of the most diverse teams in venture. But again, I just want to emphasize, it's actually something I've written a lot about. The answer to building more funding for diverse entrepreneurs is not just to make sure that there's money in the hands of diverse fund managers. That is an important part of it. But it is also unfair to assume that if you give funding to, for example, a Black fund manager, that all that fund manager is going to do is fund Black people. That's also what happens if that fund manager has a sports related thesis or a biotech related thesis, and they want to just invest in good biotech companies. Why should we limit the solution to just funds like? So I think it's very important that diversity be the responsibility of every GP, every venture fund manager, regardless of what we look like and what our backgrounds are.
Do you feel like that's been a competitive advantage when approaching founders, diverse founders, when they look across at your team and feel like they could resonate with, especially on the HL Labs part of it, right?
100%. And the fact that we've been partners with HBCU.VC, we're a venture firm that knows what a historically Black college, is. That's helpful, right? And I don't want to give us too much credit, right? We still have a long way to go ourselves. We're always iterating and always improving, but we've really tried to reach out. And then to your point, it is just something that's been written a lot about. It's very hard to pitch a room that's entirely different than you. And so, yes, if we have a team that is diverse and welcoming, that is going to have an impact on our pipeline and ultimately in our competitiveness as investors.
So I guess to wrap up, any additional thoughts you'd like to share with us, or any advice you would give anybody looking to break into this space?
It's a great, I feel very blessed to have this as my profession and be able to do the things that we're doing. It doesn't mean that there's not hard days and frustrating moments, because certainly there are, just like with anything, but it's a wonderful place to get into. It's getting bigger, keep chipping away at it. And I will say also, I founded a nonprofit that is entirely dedicated to supporting student social entrepreneurs. And what our mantra is there at the Resolution Project is that young leaders can start now. You don't have to wait. And so that applies just as much to MBA students as it does to anything else. So for all the BARD students, for all the BARD alums, and for anyone else who's watching who's a student, there's no need to put it off. There's ways to chip into the space, to intern, to work, to have ideas and solutions, start your own company, make tiny little investments if you are fortunate enough to be able to do so. Whatever it is, get in there, get involved. The space is improving, but we have a long way to go, folks.
We appreciate our loyal Impact Report listeners and hope you can help us spread the word about the series and the important sustainability work of our guests. Please rate and review the Impact Report wherever you listen to podcasts. And if you were inspired by this conversation, share a screenshot on Instagram and tag Impact Report Podcast. Learn more about the topics discussed in today's episode by visiting HL Ventures online at h-l.vc. And be sure to head to greenbiz.com or impactentrepreneur.com to read a recap of our conversation. Join us for the next episode of the Impact Report on Friday, December 16th. We'll be speaking with Don Golden of Just Capital Quotient. Interested in learning how you can launch a high-impact, purpose-driven career in sustainability? Check out the resources page from the BARD Graduate Programs in Sustainability for access to free resources to jumpstart your career. Hear from leaders in the fields of climate change, consulting, impact finance, circular economy, and more about how they launch their careers and the tips they have for you to join their industries. Visit gps.bard.edu/resources today.